Bitcoin, Ethereum, Litecoin, and of course, our little friend Doge. We've been hearing a lot of stuff about these cryptocurrencies nowadays. Still, Ethereum is one that stands out on the crowd in terms of use case, popularity, and it also crossed $3,300 as of May 4th. I mean, can you imagine those people who bought or mined this coin when it was just shy of $100 and still holding it? In this video, we are not going to talk about whether Ethereum is going to make you a billionaire or not, but about how it's used in day-to-day transaction in the future, and also what other stuff is this crypto going to be used for. But before we get started today, go ahead and leave a comment and let us know what you think Ethereum and cryptocurrency will be in the future. First, let's see what Ethereum is. Ethereum is a decentralized open source blockchain with smart contract functionality. Ether, ETH, is the native cryptocurrency of the platform. It is the second largest cryptocurrency by market capitalization, after Bitcoin, of course. It is also the most actively used in the blockchain. It was proposed in 2013 by programmer Vitalik Buterin. Development was crowdfunded in 2014, and the network went live on July 30th, 2015, with an initial supply of 72 million coins. It has been used for decentralized finance, the creation and exchange of NFTs, and also utilized for many initial coin offerings, also known as ICO. But recently, some new use cases also came into play, such as in real estate, web browsing, gaming, advertising, escrow, and most importantly, digital identity management. That's the fancy way of saying protection against identity theft and data monopoly. Ethereum's permissionless blockchain, which allows for the creation and development of applications without oversight from a central authority, creates a tremendous space for experimentation. There have been thousands of decentralized apps, also known as dApps, built on Ethereum, millions of users, and billions of dollars generated by dApps. Now let's see some of the major use cases in detail, which we think might be a new norm in the future. DeFi, decentralized finance, is the newest innovation to see an avalanche of use and growth on Ethereum. DeFi platforms are reinventing traditional financial products and services, adding programmable, decentralized, and censorship-resistant features to create brand new financial products. For example, the platform offers peer-to-peer borrowing and lending, interest on crypto holdings, decentralized exchange mechanisms, stablecoins, and composable features that maximize passive earning opportunities. In February 2021, the total value locked in DeFi platforms marked an all-time high, close to $40 billion. Imagine this. It's so much money that you can buy an average priced mansion every single day for 1 year straight in Beverly Hills and still have billions of dollars left to enjoy the rest of your life. Or perhaps just to keep buying more mansions. Another very recent attraction and hype is NFTs, where Ethereum is used a lot. Non-fungible tokens, NFTs, are unique, indivisible, and probably scarce digital assets that are useful in gaming, art, and ensuring the provenance of luxury goods. The hype over NFTs began in late 2017 with the launch of CryptoKitties Digital Cat Collectibles. But since then, the applications for the technology have grown rapidly, to say the least. NFTs have attracted an increasingly mainstream audience to cryptocurrency and blockchain technology. The NBA, Ubisoft, and LVMH are also experimenting with NFTs. Industries from healthcare to entertainment to real estate are creating novel tools on the protocol to enhance efficiency, trust, and democratize access to various types of services. For example, Ethereum provides an ideal solution for managing royalties in the music industry by distributing tokens that represent ownership rights and facilitating automated and seamless distribution of royalty payments. Cross-border payments can be sent directly, quickly, and inexpensively by using peer-to-peer protocol like Ethereum, Everx, Abra, and BloomX. these companies use blockchain technology to cut out various intermediary banks that charge fees for currency exchange. But this isn't something another cryptocurrency like Bitcoin can't do. For payments, especially Ethereum, is kind of a downgrade as it has high gas fees. Ethereum gas is a unit that measures the amount of computational effort that it will take to execute a certain operation. The high gas fees is one of the only major cons for Ethereum. The people over at Ethereum have also started implementing a series of upgrades called Ethereum 2.0, which once fully upgraded will move to proof of stake instead of its current proof of work concept, which is bad news for those crypto miners who have invested millions. This Ethereum 2.0 upgrade would make the gas price go way down for transactions, but we aren't expecting the full upgrade until about 2022. So would your Ethereum be used for day-to-day transactions? Maybe, and even if it's possible, that's a long way out. Certain companies are already using Ethereum in their services and experimenting with this tech. Some big names include Amazon for supply chain and retail, Signature Bank, Citigroup, etc. for banking and financial services, Google, Microsoft, VMware for software information technology. Now let's compare Ethereum to Bitcoin. Bitcoin's primary use case is that it's a store of value and a digital currency. This makes it more like an alternative to gold, but with comparatively higher volatility. Ethereum can also be used as a digital currency and store of value, but the Ethereum network makes it also possible to create and run decentralized applications and smart contracts. Ethereum blocks are also validated approximately every 12 seconds or so on its network, as opposed to approximately every 10 minutes or so on Bitcoin. Additionally, Bitcoin has a fixed supply of 21 million coins, whereas Ethereum has no supply cap. Currently, Ethereum and Bitcoin are both mined through proof of work and can be purchased on cryptocurrency exchanges. So if you want to invest long-term, sure, Bitcoin would be your choice because of its limited supply and ever-increasing demand. But in terms of implementation and use case, Ethereum would be anyone's choice. So what about the price of Ethereum? Will it reach or even cross the golden $10,000 mark? Its price will increase until the demand decreases. Since it's one of the most popular cryptocurrencies with an increasing number of applications built around it, we're certainly hoping for the best. Now let's talk about the future of quantum computing. But you know what? That actually sounds like a topic to discuss in a different episode here on Discover Zen. If you liked what you saw, go ahead and click that like and subscribe button. Please leave a comment if there's anything in particular that you want to see.